As of right now, on Thursday, April 2026, the market is currently open and Nuburu stock, trading under the ticker symbol BURU on the NYSE American, is priced at 28 cents per share, representing an intraday move of roughly 8% to the upside following a period of intense volatility earlier in the week. While most traders are looking at this penny stock as just another speculative play in the high-power laser niche, the real story here is a massive pivot toward the defense sector that has largely flown under the radar of retail investors. You might think Nuburu is just a struggling industrial toolmaker, but the reality is they have quietly spent the last few months positioning themselves as a primary provider for non-kinetic counter-drone systems and directed energy weapons. This isn't just about cutting metal anymore, it is about the modern battlefield. While many people on social media are chasing the latest AI hype or looking for the next Nvidia stock, the smart money is starting to look at how these smaller, specialized firms are being integrated into the national defense infrastructure. The expectation from the general public is that a microcap company like Nuburu is perpetually on the verge of a liquidity crisis. After all, they did just close a $12 million public offering in February and performed a reverse stock split to maintain their listing. But the reality is that the company's balance sheet has seen a massive transformation over the last quarter. Cash on hand has jumped from a negligible $200,000 to nearly $25 million, and they are targeting positive shareholders' equity by the end of Q2 2026. This is a significant pivot point because once a company crosses that threshold, it starts appearing on the screens of institutional players who use tools like the Schwab Intelligent Portfolios or professional-grade scanners on an individual brokerage to find turnaround stories. When we look at the recent price action, it is impossible to ignore the massive spikes in volume. Just yesterday, we saw over 57 million shares change hands, and earlier in the week, that number cleared 142 million. For a company with a market cap sitting around $30 million to $50 million, depending on the daily swing, that level of turnover is astronomical. It suggests that a lot of old, tired hands are being shaken out, and a new group of investors is moving in. Whether you use the Robinhood app for quick trades or a more robust Fidelity trading platform, you can see that technical tension building up at the 30-cent resistance level. If it breaks that with conviction, the gap up potential is significant because the 52-week high is all the way up at $4.24, showing just how much ground has been lost and how much room there is for a recovery if the defense strategy pays off. The core of this movement is fueled by a series of high-stakes partnerships. They've activated a joint venture with Maddox Defense to build US-based manufacturing infrastructure and are moving into the $20 billion counter-drone market. They even took a strategic equity position in Heckler and Koch. This is a very aggressive move for a company of this size. It's the kind of thing you see in a Fidelity Wealth Management report under speculative growth, because the risks are high, but the potential for a massive contract from the US government or a Tier 1 defense firm in the Asia-Pacific region is the carrot at the end of the stick. Comment below how many shares of Nuburu or other defense-related penny stocks you currently hold in your portfolio. For many investors using online investing tools or looking for investment help on various investing sites, the question is always about the burn rate. Nuburu's trailing 12-month earnings were deep in the red, but the revenue reactivation through their Lyocon subsidiary is a concrete sign of life. They recently started a production ramp for 40 high-power blue laser systems for an agri-tech firm, which provides the cash flow needed to keep the lights on while they chase those much larger defense contracts. This dual-use strategy, selling to both industrial and military customers, is a classic way to mitigate the feast-or-famine nature of government work. It's a similar logic to why people diversify their holdings across Apple stock or broad Fidelity ETFs. You want some stability to balance out the high-growth bets. If you are managing your own self-investing through a SoFi active investing account or using the Interactive Brokers platform, you know that the macro environment for small caps has been brutal. Higher interest rates usually crush companies that aren't yet profitable. However, the specific niche Nuburu occupies, directed energy, is one of the few areas where government spending is actually accelerating regardless of the wider economy. Drones are the biggest threat on the modern battlefield, and traditional missiles are too expensive to use against $500 quadcopters. That's where blue laser technology comes in. It's more efficient and more compact than the standard infrared lasers other companies use. This technical advantage is the reality that contradicts the expectation that Nuburu is just another generic laser company. Looking back at their business model, Nuburu started with a focus on 3D printing and welding, especially for copper and other reflective metals that are hard to process with traditional lasers. Their blue laser technology has a higher absorption rate, which means it can weld faster and more accurately with less power. While that industrial business still exists, the company is clearly shifting its weight. They've acquired companies like Lyocon and taken control of Orbit's SaaS platform to build a full ecosystem. They aren't just selling a laser, they are selling the software and the hardware needed for non-kinetic effects. In plain English, they want to be the ones who disable enemy electronics and drones without using a single bullet. For the retail trader on a Robinhood stock trading account or someone looking through Fidelity mutual funds for indirect exposure, the volatility here is the biggest hurdle. We've seen the stock move 30% in a single day and then go flat for a week. This is characteristic of a stock that is being accumulated by larger players who are trying to hide their footprints. When the volume is this high on days where there is no news, it usually means the market is anticipating a big announcement. If the government demonstration of their counter-drone prototype goes well, the current price of 28 cents might look like a gift in retrospect. But as always with online investment in microcaps, the risk of dilution is never zero. They have a history of using equity to fund their growth, which is why monitoring their SEC filings is a paramount part of your due diligence. The future outlook for Nuburu depends entirely on their ability to hit that Q2 target of positive shareholders' equity. If they do that, they can move away from the distressed asset label and start being treated like a legitimate growth company. The catalysts are lined up: the Ukraine industrial deployment platform, the Maddox defense JV, and the potential for a massive order from the Asia-Pacific defense market. These aren't just vague plans, they are funded programs with active production phases. If you're using SoFi Invest or checking your Robinhood cash management account for spare capital, this is the kind of high-conviction play that requires a very specific stomach for risk. In summary, the market expects Nuburu to stay a struggling penny stock, weighed down by its past losses and the need for constant capital raises. The reality, however, is a company that has completely overhauled its leadership, cleaned up its balance sheet with $24 million in fresh cash, and pivoted into one of the most high-demand sectors in the world today, non-kinetic defense. The gap between that 28-cent price and the $4 highs of the past represents the massive uncertainty the market feels. But for those who see the progress in their manufacturing ramp and the strategic importance of blue laser technology, the tension is building towards a potential breakout. Whether this is a long-term hold for a Fidelity IRAs or a quick swing trade on an Interactive Brokers account, Nuburu has moved from a quiet industrial player to a loud, high-volume defense contender that is impossible to ignore as we head into the second half of 2026. Keep a close eye on that 30-cent level. It's the gatekeeper for the next major leg up. Regardless of the outcome, the fundamental shift in their business model from simple hardware to a dual-use defense and security platform has changed the DNA of this stock entirely, providing a depth of opportunity that few people expected just a few months ago.